morning and welcome to Cycle on MNB World, your go-to source for the latest insights into the economic and financial landscape of Mongolia. I'm your host Batsir Namshar, and we have a packed edition ahead filled with crucial updates and analysis. In today's review, we'll be delving into the dynamic world of Mongolia's economy, exploring latest trends and outlooks. In its latest regional and country economy outlook, the Asian Development Bank has projected Mongolia's economy to maintain its growth trajectory despite facing various challenges. According to the forecast, Mongolia's economy is expected to grow by 4.1% in 2024 and further expand by 6% in 2025.
The Asian Development Bank report highlights the robust performance of Mongolia's economy in 2023, driven by increased mineral output and exports, leading to current account and fiscal surpluses, as well as larger international reserves. However, inflation remains elevated, although it receded slightly. Mining, particularly the Oyu mine, is anticipated to be the primary driver of growth in 2024 and 2025, with expectations of ramping up copper concentrate production. Despite the positive outlook, Mongolia still faces challenges in 2024, notably from one of its worst winters in recent memory, leading to a contraction in the agriculture sector. The Dzot disaster has resulted in significant livestock losses, with over 6 million heads of livestock perishing by April, emphasizing the need for increased climate investment to enhance resilience. The ADB country director for Mongolia, Shannon Cowling, emphasized the importance of attracting investment to meet climate commitments and bolster resilience through institutional capacity improvements.
On the Dzot, we do acknowledge that this is a significant challenge that has not yet resolved for the country, and that the UN has estimated that the potential response needs could be up to $14 million or more. You're right that several international diplomatic missions as well as international agencies have provided support. ADB approved a grant of $2.8 million from our Asia Pacific Disaster Response Fund, and this particular fund is meant to provide quick response support to governments for life-saving and life-sustaining needs.
And we see investment declining slightly in 2024 due to falling capital investment with the Oyu Tolgoi mine, which is now in its production phase. Whereas we should see that come back in 2025 with the recovery of the agricultural sector. As we look at our outlook for inflation, we see inflation moderating, this is average inflation, to 7% in 2024 and 6.8% in 2025, though it will remain elevated.
Inflation is expected to ease slightly to 7% in 2024 and somewhat further to 6.8% in 2025, although it will remain elevated. The current account balance, which shifted to surplus in 2023, is anticipated to return to deficit in 2024 and 2025 due to increased imports following strong economic activity and growth. The outlook also identifies downside risks, including the ongoing agricultural disaster, potential reductions in coal imports by China, as well as lower commodity prices. However, there are upside potentials such as higher commodity prices for both copper and gold, expanded coal sales, or a faster-than-expected production ramp-up at Oyu mine. Despite these challenges, Mongolia's economy is expected to navigate through, supported by its resilience and potential for growth in key sectors. The ADB's report underscores the importance of proactive measures to address challenges and capitalize on opportunities for sustainable economic development in Mongolia.
Pressures on inflation.
On April 11th, ADB Mongolia introduced the latest Asian Development Outlook this month. ADB has forecasted continued robust expansion for developing economies in Asia and the Pacific. Despite global uncertainties, the region is expected to see an average growth of 4.9% this year, propelled by strong domestic demand, improving semiconductor exports, and a gradual recovery in tourism.
According to ADB chief economist Albert Park, the outlook remains positive with stable growth anticipated for the majority of economies in the region. Consumer confidence is on the rise and investments remain resilient, bolstered by improving external demand, particularly in the semiconductor industry. Key highlights from the report include a projected 7% expansion for India this year, making it a major growth engine in the region, alongside a slowdown in the People's Republic of China due to weaknesses in the property market and subdued consumption. The People's Republic of China's growth is forecasted to slow to 4.8% this year and 4.5% next year. However, policymakers are urged to remain vigilant as risks persist, including supply chain disruptions, uncertainty surrounding U.S. monetary policy, extreme weather events, and further weaknesses in the PRC's property market. Inflation is expected to moderate in 2024 and 2025, although it remains elevated compared to pre-pandemic levels, particularly in import-reliant economies due to higher food prices. Rice prices in particular are expected to stay elevated this year due to various factors including adverse weather conditions and restrictions on rice exports in India. To address rising rice prices and ensure food security, the Asian Development Bank recommends targeted subsidies, enhanced market transparency, and investments in agricultural technology and infrastructure. Regional cooperation is also highlighted as crucial for managing rice prices and mitigating their impact across Asia. As the region navigates economic uncertainties, the ADB's outlook underscores the importance of continued policy support and regional collaboration to sustain growth, momentum, and address emerging challenges.
In 2022, it was estimated that an investment of 15 trillion MNT would be required to overhaul the energy infrastructure. Failure to implement reforms in Mongolia's energy sector could lead to future losses. Details are in the following report.
Electricity consumption is steadily increasing year by year. Failure to revise the tariff structure by 2026 will result in significant financial losses. The current tariff for producing electricity stands at 224 Mongolian tugreks, while it's sold at 170 Mongolian tugreks, resulting in a loss of 28%. Mongolia allocates around 2.2% of its income towards the cost electricity, notably less than Italy, which spends 7.2% of its income on the same. Studies have examined the potential burden on citizens if the electricity tariff were to increase by 10%, revealing a projected impact of 0.2% on inflation.
It is recommended to raise the tariff twice a year, but if that proves impossible, at least once a year would suffice. This strategy aims to ensure that by 2029, the energy sector operates without incurring any further losses. And from 2029, the energy sector should seek more targeted markets instead of depending on one single consumer.
Expansion plans for thermal power plant number 4 remain a standstill despite ongoing discussions aimed at attracting international investment. However, the emergence of a new trend focused on reducing carbon dioxide emissions has hindered investment in the coal sector. Consequently, international donors are reluctant to invest in the project. In addition, the state budget bill doesn't include such important expansion plans. MNB reporter talked to the Minister of Finance representative regarding this matter. The state budget bill cannot currently fund major projects adequately. Traditionally, 40% of the budget was allocated to the social sector, covering areas such as schools, kindergartens, and hospitals, while 20% was directed towards infrastructure projects. However, starting this year, there has been a shift with 42% of the budget allocated to infrastructure and 30% to the social sector. Experts note that the failure to enact reforms in the energy sector may lead to future losses. Electricity consumption is rising, necessitating a reassessment of tariff structures to avoid significant financial losses, given the current disparity between the cost of production and the tariffs charged to consumers.
We appreciate you joining us today for an in-depth look into Mongolia's economic landscape. Stay informed, stay engaged, and remember to tune in for our next insightful exploration. Thank you for being with us. Until next time, goodbye and have a great day.